Hey guys, Augustino here. I've been getting some calls about the net lease business I've been talking about recently. People want to know a little more about how it works and what I mean by a fund, so I figured I would just clarify it here. So, there are two specific elements to what we're doing. The first is the nature of the single family asset itself, which I've talked about before. And the second is how we're acquiring them using this fund model. Okay, so the first thing, as I talked about before, a location like a Dollar General, Dollar Tree, like the Applebee's I talked about a little bit ago. The interesting thing is that the company that is there, they don't actually own the property. They lease the space. So who owns it? Well, investors do. Investors like you, investors like me. We end up owning the asset. So to us as owners, there's little to no overhead associated with owning these types of properties because we aren't responsible for the renovations, the repairs, insurance, the taxes, all that. That means that there's no surprises. There's no replacement for boilers. There's no plumbing emergencies that eat into the overall cash flow. So this, of course, depends on the type of lease it is, right? So cool thing though is there's no loss of rents due to vacancy or turnover because this is very very rare because the corporate or the franchise backs the leases as well. So think of a Dollar General. Okay, a Dollar General location goes out of business, they end up shutting it down. Dollar General corporate, they promise to pay the remainder of the lease, right? It's actually in the lease. So the turnovers are very few because of these long terms that they put in place, and there's a large upfront investment that's made by the tenant to outfit the space to make it look the way it does, to put up the signage, to paint it, to whatever, put up the finish, all that fun stuff. Now the second part is just as important. So my partners and I, we set up a fund, right? We call it the Fortress Fund, and what we do is we buy these single tenant net lease assets, and we're looking to buy at least 8 over the course of a 12-month period, with the intent of building safe and very very predictable monthly income. All of returns are delivered on a monthly basis. So our fund acquires these single tenant net lease real estate assets, like I just talked about. It's going to be auto related, mobile phone providers, medical service, pharmacies, essential retail like dollar stores, of course, is a big one. And they operate in good markets throughout the U.S. And these typical properties are large chains, meaning they're not independent operators. We stay away from all that. We don't touch those, and they have to have a corporate or a franchise guarantee. So these are stores that you visit on a daily basis. Your family has shopped there for years, maybe even decades. These are brands that you know and love. There's no surprises here with the types of stuff that we're buying. So the portfolio is designed for investors to achieve geographical diversification, industry diversification, and you have a tenant credit security as well. And of course, we own the real estate. So these net lease properties have long-term contractual rents backed by some of these great companies, large companies with good brand names, very well capitalized. You know who they are. And and again, because we own the real estate, we also get all the depreciation, all the tax benefits that come along with it. So when you combine all these two specific things, you get something really, really cool. So as an investor in the fund, you own a piece of all of the assets in a portfolio. Meaning if we buy a combination of 10 Dollar Generals, CVS stores, Advanced Auto Parts, or whatever, it's like you have ownership in all these locations. It's almost like a mutual fund, except it's backed with lease guarantees, and you own the real estate, and you get all the tax benefits that come along with it. So it's actually better, in my opinion. Now, I love multifamily. I built my career in multifamily acquisitions. We're still developing stuff today, actually. Combined, we have about $350 million of stabilized and post-valuation development projects. So, however, I still believe that a balanced portfolio is very, very important. I don't see it as multifamily and net lease as an either or, as I'm personally invested in both. Rather, I want to diversify and mitigate risk. So I also like the predictable cash flow from net lease properties. This means that you have that reliable and stable distributions for investors that get in on these deals too. So, anyway, if you want to get in on something like this, or you want to know more about how it works, you want to build some hands-off mailbox money, click the link in the description, book a call. I'm happy to share with you more about what we're doing. All right, be bulletproof, guys. I'll talk to you soon.